Hey friends, it's Kevin Goehring here, your Sacramento, Stockton area realtor and lender here with this week's weekly real estate report. Hey, let's take a look at the chart and let me show you what's going on this week. Well, as always, I like to start with the green line, our active amount of homes available on the market, and it is still dismally low. Look at that. So we have at least crossed that 2,000 home threshold, and we've been there for about the last 4 weeks. I was hoping to see more and more, but really, like last week, we had exactly at this time 2,011. This week, we're at 2,101. So, not even 100 home increase. And it's just, to me, I can't wait every week to get in here, look at the stats, see where we're headed with this stuff. I'm really hoping to see it continue to go up. What do I expect? Well, if we go back historically and kind of look at what happens. Well, this was the COVID back here. A year ago. So here's where we were just a little over a year ago at about 4,500 homes, and then COVID, and then wham. So what we want to see, we can look down here, at least the last couple of years, our low point should be about 3,500. So I would love to see this get back up to the low point, and I'm really hoping that we're not going to see a seasonal drop off. So as you can see here, seasonal drop off. So we're going to start that right about September, beginning of October. It's where we happened here. We can go back probably about the same time right here. If I can pick up the date right there. There we go. Back in November 1st. November 1st. So, when winter comes, and of course I would tell all my buyers that, hey, you want a good deal? Go out when it rains. That's when you can get your best deal. But I'm really hoping that instead of seeing this huge drop off, we're going to see more of a plateau. And maybe it'll plateau out, going up, plateau, and then continue its climb come the spring season coming back. Only time's going to tell. All right. So pending sales just continues to go up. Now we did have a little bit of a plateau the last 2 weeks and then a little tiny drop off. That's just not enough data right there to show a trend. The trend overall, of course, is just up, up, up. And it is, to me, interesting that if you look at where a normal year is going to end up, normally we're going to peak out about, was that 4,800 or so? Yeah, 4,800 homes. Over here, we peaked over 5,000. So it's somewhere in this 4,000 to 5,000, and we're right in there where normal is. As far as pending sales go. So we still have all of the buyers out there wanting to buy. And of course, that's just, this gold line just continues to floor me every week, just watching it go up and up and up. So this week, I think we're up another 10,000 over last week. It just continues to go crazy. Of course, that just, the sales lines here just are indicating of what's going on. So again, I'm not expecting the blue line to have this big drop off. I think it's also going to sort of plateau out. And hopefully the spread between the pending sales and the available homes closes up a little bit. That's what we need to happen. So let's talk about rates. Rates were at 2.95 last week, and they went up a little bit to 2.99%. With 0.6 of a point up front. That's according to Freddie Mac, national averages. And like I always say, remember, that's an average. I had somebody call me this week, and they're shopping for a loan. They said, hey, Kevin, we got a quote from Big Bank, and we're looking at 2.75 on a 15-year fix. And I said, you know what? That 2.75 is really actually not a bad rate for a 30-year fixed. And he said, I don't think you heard me right, Kevin. I said that was a rate for a 15. He said, I know what you said. The rate they're quoting you for that 15 is a good rate for a 30-year fixed. It was horrible. Which brings me to a point. Now, an interesting thing that is very rarely ever talked about, especially from somebody in the industry to somebody outside the industry, is the fact that, well, I do mention a lot that rates fluctuate. Rate fluctuate can be by the hour, by the minute. It's market driven. It's not because Biden wants you to refinance, because the pop-up ads say, and it is not driven by the Fed. I mean, yes, they have some control in a roundabout way, but the point I want to make is that lenders actually fluctuate their rates based upon their application rate. So in other words, let's just say Wells Fargo, everybody decides today they're going to go to Wells Fargo, and Wells Fargo is suddenly slammed with loan applications. Wells Fargo is going to raise their rates That's how they kind of put the brakes on. Their underwriters are backlogged. They can't get appraisers out. People are waiting too long, and then it starts to look bad for business. So rather than looking bad, you just raise your rates up, and then people, when they shop around, they go, Wells Fargo's a little bit high. I think I'm going to go over here and I'm going to use Kevin this week. And Kevin's got much better rates. Kevin always has much better rates. So, and a third person Kevin there. So that kind of happens. So you kind of have to watch that. So, a lender who is notoriously low on rates most of the time isn't always low on rates all of the time, if you follow what I'm saying, because every lender is going to go up and down with their volume as it comes in. So anyway, just a little tidbit right there. What else can I tell you? Well, gosh, I just spent the last 2 hours in my car. And of course, I told you I listen to a lot of talk radio, and it just blows my mind the amount of mortgage ads on the radio. And the bait and switch tactics just make me nuts. Now, I will say that every one of them was in compliance with the law. In other words, I heard somebody saying, hey, we got right now a 1.99% 15-year fixed rate. Okay, that is true. And then they kind of mumble something about the APR being 2.41% based on 400,000 loan, 50% LTV. And you're like, wait, what happened? Now, if you're in the industry, you can pick up on this. What this ad said is, we have a 1.99% rate. Our APR is 2.2%. Well, the spread between that rate and the APR is the government's way of trying to help you figure out if there are fees involved. So, big spread, or a lot of fees involved, right? They're kind of hidden those fees, maybe points up front to get that rate down. So you heard that 1.99. All right. Then they mumbled something about 50% LTV. Well, that means, and a $400,000 loan amount, which means that you had better have a house worth at least $800,000 to qualify for this. And oh, by the way, we're only going to go up to $400,000 on that loan amount. So you've got to qualify in all those respects in order to get this special rate, which, oh, by the way, has a bunch of fees. But, just it works apparently because they're paying a lot of money for this advertising. Anyway, just kind of drives me nuts. You got to know to look out for the bait and switch, the lead just get you to call kind of a thing. So, hey, if I feel that I can help one person out there not get scammed, I think I've done my job. Anyway, on that note, it's hard to believe it's already Thursday. It was a short week and still got a lot of work to do this week. So I hope that you have a great weekend, and I will see you here next week. Bye.